Thank you for tuning into the Equity Channel, where we provide the highest quality stock market analysis to individual investors. Our goal is to help you improve your returns by keeping you up to date with everything you need to know. What helps investors beat the market is information and knowledge of how to use it. We'll provide you with both. Before we get started, be sure that you subscribe and turn on your notifications, because every time we drop a new episode, money is made. As we kick off the month of May 2024, investors should be cautious about believing the downside in stocks is done. Also, be careful when buying stocks that have yet to announce earnings throughout the rest of the year. 9 out of 11 sectors closed below the monthly pivot in April, while 8 out of 11 sectors opened the month of May below the 50-day moving average. The market itself could have some more downside over the next 21 days, as opening the month below the pivot generally signals the potential for more downside to come. But at the same time, don't be afraid to buy stocks that are trading below fair value. Apple is a great example of that. I did warn investors earlier in the year not to buy Apple stock above $170 per share. But I'm not saying that to brag. What I am saying is that I knew what price I wanted to buy Apple stock at, and I waited. When it fell below $170, I wasted no time. I bought the stock at $168 per share. My max drawdown since I made that investment was 2.4%, which is much better than the 16% drawdown that investors faced when they bought Apple stock at the beginning of the year. Now, as we can see from Apple's performance last week, my understanding of the price that I wanted to pay allowed me to buy near the lows and benefit from that pop on earnings. Investors that don't know how to discount the company's earnings or cash flows should always look for the average analyst target. Once you find that, you can subtract the amount of return you expect from the target price and only buy if the stock is trading at or below that discounted price. This is known as a margin of safety. When buying a stock that is trading below the average analyst target by at least the amount of return you expect over the course of a year, it's giving you cushion from further downside, as well as making it more likely that you will get a positive return, or the return that you want. For example, investors may be interested in Novo Nordisk because the weight loss drug industry seems to be taking off. But buying that stock ahead of now would have been a mistake. The average analyst target is around $135 per share, and my expected return is 15%. So I would be looking for the stock to trade closer to $117 per share. That discounts the stock by 1 year's worth of returns. The greater the risk I believe I'm taking, I would discount the stock even more. For example, discounting this stock for 2 years worth of returns would mean not buying until it's trading closer to $102 per share. This margin of safety is how investors protect themselves from the uncertainty of an investment. For example, even though Novo Nordisk beat on earnings and had profits rise by 28%, they've been down since that earnings release. This is the type of thing we're looking to protect ourselves against when we look to buy stocks at a discount to fair value or below the average analyst target. Avoiding paying the highest prices for stocks is one of the easiest ways to reduce your risk and increase your portfolio returns. All you need as an investor is the discipline to say you will not buy above this price and the consistency to follow through. Do this with stocks you've just found and stocks you already own. A margin of safety is how we achieve the best total return as well, because even our dividend payouts will be higher. The Equity Channel is one of the most followed stock market podcasts for beginners, a valuable resource for investors who are looking for information on the stock market and the economy. We love to make our episodes quick, straight to the point, and rich in value. We hope that's what you got today. Be sure that you subscribe, turn on your notifications, because every time we drop a new episode, money is made.